Hey, it's Eric here with Homebridge Financial Home Mortgage with my weekly update on the economy and mortgage rates for the week ending July 8th, 2022. Well, the headlines today are filled with news that job creation in June came in super strong, much stronger than expected, at 372,000 jobs versus expectations at 250,000. But a deeper dive into the data reveals a slightly different story. There's two employment surveys conducted each month. This is by the Bureau of Labor Statistics. There's the Establishment Survey and the Household Survey. The Establishment Survey reports jobs data provided by businesses. The Household Survey is conducted by telephone surveys, and it also includes jobs data for self employed, unpaid family workers, agricultural workers, and private household workers. So it's a much more broad measure of the jobs picture. The household survey showed a decline of 315,000 jobs for the month of June, making the overall jobs picture not quite as strong as that 372,000 person headline indicates. Kind of somewhat similar for unemployment rate. Headlines report the unemployment rate is steady at 3.6%. That's fine, but the rarely reported U6 statistic is hovering still around 6.7%. The U6 statistic includes all unemployed, including marginally attached part-time workers. So it's a much more broad measure of the real unemployment rate or the overall unemployment rate. So deep diving aside, the June numbers probably increase the likelihood that the Federal Reserve will increase rates again 0.75% at their next Federal Open Market Committee meeting, which will be held June 26th and June 27th. Rates for the week, they started lower. The beginning of the week, they ended up slightly higher than last week. Here are the national averages for 30-year mortgages. Conventional 30-year fixed rate, 5.73%, up about 0.03% from last week, pretty flat. 15-year fixed rates straight at 5%. Those are about even from last week. 30-year fixed rate FHA and VA, 5.25%, up about 0.12 from last week. 30-year fixed rate jumbos, 4.82%. Those are up about 0.08. And 5/1 ARMs, 5.35%. Those are up about 0.15% from last week. In other news, there are a couple non-QM lenders went out of business this week. They shuttered operations. Sprout Mortgage and First Guarantee Mortgage ceased operations due to challenges selling their loans to investors on Wall Street. Non-QM loans use alternative methods of approval, such as cash flow from a rental property, bank statements for a self-employed borrower, or assets for somebody who's got a lot of assets but not a lot of income. They serve an important niche in the marketplace for borrowers who have some financial strengths. You know, they're not high-risk people, but they just don't fit into the standard underwriting box. These programs typically carry a higher interest rate compared to a standard conventional loan, but the rapid rise in conventional rates this year and indications of a weakening economy have made the securitization of these loans much more difficult. So Wall Street has just sort of lost some of their appetite, for these types of programs. That said, we still have them. Homebridge has a very stable financing platform, and we have lots of programs to meet the needs of our clients. So we do have a cash flow program. That's one where we actually qualify you based on the cash flow of a rental property that you're buying. Essentially, if the rental income on that property is greater than the mortgage payment, we can probably make that loan work. We have a bank statement program for self-employed borrowers. So we use bank statements for either the past 12 or 24 months to document income for a self-employed borrower in lieu of tax returns. This can sometimes make sense, especially if a business is just getting started or they have some unusual events on their tax returns. And we have an asset program, somebody that's asset rich. We can use those assets as qualifying income in lieu of standard tax returns or pay stubs. So if you have a situation where you're maybe having difficulty getting approved using standard traditional financing methods, give a call, and maybe we can help you and take a look at some of these alternative programs to see if they'll suit your needs. I'm always here to answer these questions and help solve those story problems. You can reach me at 206-915-ERIC. You can email me, Eric at ericismybanker.com. Look for me on social media. Just search Eric is my banker. And if you go onto YouTube, you can subscribe and get these a notification of my weekly updates every week as soon as they come out. Hope this information is helpful for you. Have a great weekend. We'll talk to you next week.